everyone. Happy New Year. So happy to see you today. Welcome you joining today's class. Recent past Prop 19, how it affect the homeowner's property tax. I'm Pauline Lam from Cotai Realty, your 2021 co-chair, Education Committee, West and Gabriel Valley Realtors. A friendly reminder, all participants will be muted. If you have any questions, please text it into the chat box. Speaker will answer it during the Q&A section. This section is being recorded and will be available on YouTube channel, West and Gabriel Valley Realtors. Now, I'm so happy to have our Jeff Huang, Education Committee member, to welcome and introduce our today's special speaker, Attorney Paul Huang. And Jeff, the floor is yours.
Hi, good morning, everyone. Today we have a very special guest. We have Paul Horn. He's a probate attorney and also a CPA. He's going to be presenting us about recently passed California Prop 19 and how it affects homeowners and property tax. So without further ado, Paul, the floor is yours.
Okay, so good morning, everybody. Can you all see me okay? Hear me okay?
Yes.
Hi, Mary Scott. Okay, so Prop 19. All right, so Prop 19 is going to take effect, probably in about a week. Okay. So you all know what property tax is, right? You buy a piece of property, you pay property tax, right? And property tax is about what, 1.25%, would you say? Yeah, about 1.25%. So you bought $1 million house, it'll be what, 12,500-ish, somewhere in that ballpark, right, per year. Okay. So what if that particular property, that $1 million house, you bought a long time ago, 40 years ago, and your property tax might be, oh my God, 5,000, for example, for that $1 million house. When you pass away, when you die, when it goes to your son, to your daughter, right? Is it still going to be that 5,000, or is it going to get reassessed to, 12 grand or 13 grand, whatever the fair market value is of the house? That is the essence of Prop 19. That is the essence of what we're talking about today. Prop 19, from a property tax perspective, is not going to affect your life right now while you are alive. It's not going to increase your property tax. It's when you die, when your daughter, your son gets the house, the law has changed. The law has changed. What I'm going to do is I'm going to show you a screen. I'm going to show you a screen. I'm going to sort of compare for you. Let me see if I can do this. Can you all see my, let me see. I'm trying to show you my PowerPoint. Can you all see my PowerPoint? Nod your head, Mary, yeah? Okay, great. Yeah, so Prop 19, you can it's sort of made up of two categories, the good category and the bad category. Okay. So Prop 19, in your head, you want to think about the good part and the bad part. So let's talk about the bad part first. Give me the bad news first, right? Let's talk about the bad news first. So the bad news is that it kind of does away, almost kind of does away with Prop 58 and Prop 193. Prop 58, Prop 193 allows you to pass on your old property tax to your son, to your daughter. You know that San Marino house that you're living in, that your mom bought, 40 years ago for 500,000, now it's 5 million? Yeah, tremendous value increase, right? So Prop 58 would have passed that $5 million San Marino house to your daughter, to your son, without increasing the property tax. That is Prop 58. Prop 58 would have kept that San Marino house, that $5 million house that your mom bought for $500,000 40 years ago. It would have kept it at the same property tax. That's Prop 58. Prop 19 is going to basically restrain that. It's going to put a chokehold on that. It's only going to give you plus $1 million increase only. The law of the land right now for one more week is that you can pass on your house to your son, your daughter without a property tax increase if it's your primary resident, unlimited amount, right? The house that you bought in San Marino for $5 million, you only spent $500,000 on it. If your son, your daughter receive that house, that your property tax would still be very low. And also rental property, you can pass up to $1 million in assessed value for rental property, okay? Prop 19 definitely 100% does away with rental property. If you have 5 rental property, 2 rental property, 1 rental property, vacation home, when you die and it goes to your son, to your daughter, the rental property tax is going to get reassessed. That is really the essence of Prop 19. It's basically saying, hey, when you pass away, your rental property is going to get reassessed, period. Your main house will only get limited exemption. So going back to my San Marino house, where mom bought it for 500 grand, now it's worth 5 million. And mom lives there, is her main resident. When she died, it goes to the daughter or the son. The daughter and the son is only going to get that 500,000 plus $1 million, so 1.5 only, will not get reassessed. Everything from 1.5 million to 5 million gets reassessed. So hear me clearly. This is a good example for you. Memorize this example. If you memorize this example, write it down, you will understand Prop 19. Let me do it again. Okay, write this down. Mom bought the house in San Marino for 500,000. Okay, that's her assessed value. 40 years ago, now it's worth 5 million. When mom passed away, we take that 500,000, we add $1 million to it, is 1.5 million. So 1.5 does not get reassessed. The difference between 1.5 million and 5 million gets reassessed. So when mom passed away, we're staying with the same example, the San Marino house, we're staying with the same example. When mom passed away, you're gonna go ahead and take her property tax statement, right? You're gonna take the property tax statement. When you read the property tax, guys, when you read the property tax, there's a space in there, right? That says assessed value, right, guys? Adam, nod your head, please. Assessed value, right? When you read your property tax statement, Mary, you see a line item that says assessed value. So when mom died, you take her last property tax statement, whatever that assessed value is. Let's just make the math simple. Let's say that assessed value is 500,000 for the San Marino house. You add $1 million to it, so now it's 1.5 million. It does not get reassessed. The difference between 1.5 million and 5 million gets reassessed. That's Prop 19. Prop 58, the current law right now for one more week would be okay, would be no problem. It will allow you to have the 5 million non-reassessed, 0. It would allow you to keep mom property tax the same. Okay, so that is Prop 19, the bad part of Prop 19. It takes away the rental property. Any rental property, vacation home, whatever it is, it's going to get reassessed. And Prop 19 says, okay, show me mom's property tax statement, please. Whatever that number is, add $1 million to it. Oh, and for you to get it, you must move in and live in that San Marino house. That has to be a primary resident. So it's got to be mom's primary resident, right? Mom or dad's primary resident, and you have to live in there. And they only give you an extra $1 million. Okay, so memorize those three things here. So that is sort of like the meat of Prop 19. Okay, so Adam is saying, hey, on rental property, what if it's held in a trust? It doesn't matter, Adam. It does not matter, because when you say trust, I'm assuming it's a regular trust. A regular trust, you still own the property. Adam, you still own the property, so it's just like yours. Okay, so it doesn't help to be in a trust. Or primary residence, Sherry asked, if it's in a trust, doesn't matter. A trust doesn't do you any good, right? There's no, Prop 19 is basically cut off the loophole for property tax reassessment. What Prop 19 is meant to do is this. What Prop 19 is meant to do is this. That San Marino house that mom bought for $500,000, now it's worth $5 million. And the son lives in New York. And the son is a billionaire, and he's renting that San Marino $5 million house out and still receiving mom's low property tax. Prop 19 is closing that loophole. Prop 19 says, hey, billionaire son, move into San Marino. And number two, we'll only give you an extra $1 million. Okay. All right. Yeah. So trust, no trust, doesn't matter. Trust, no trust, it doesn't matter. Okay. So let's see here. So Eric asked me, what if the rental property is in an irrevocable trust? Okay. All right. So someone asked me, hey, if my house is in a trust, you know, I am okay, right? The answer is no. In a regular trust, no. If it's in an irrevocable trust, it's a different story. But if it's an irrevocable trust, you have to understand it's Prop 19 is pretty complicated. There are some, first of all, you know, any irrevocable trust you do, you got 1 week to do it. Okay, and probably no good lawyer is going to take your case right now, because everybody's inundated with work. Okay, to understand, someone says, oh, what if I give my house away right now? You know, this week. What if I go and do it this week? Giving your house away right now, and you don't want to give it to your son or your daughter, so you put it into an irrevocable trust. But to understand the ramification of to understand and appreciate, you know, all the complexity of doing that, you have to understand these three taxes. When you die, right? You might die, right? You're all gonna die, right? When you die, these are the three taxes that you're gonna have to understand. Well, maybe you don't have to understand because you're in heaven, right? Who cares, right? Let your son and daughter worry about it. But your son or daughter, whatever you do right now, right? Your CPA, your lawyer has to understand the integration, the interlinked between the estate tax, capital gain, and property tax. Okay, those are the three taxes. Remember I said Prop 19 only affects you when you die, right? And you leave the house to your son, your daughter. Well, that's what we've been talking about. That's Prop 19, right? That's number 3, property tax, right? So you say, well, Paul, you know, I bought the house in San Marino for $500,000. Now it's worth $5 million. Hey, you know, I have 1 week left. Why don't I give this house to my son right now, to my daughter right now? Yeah, I still got 1 week to do it. Okay. The problem is, and just look at the screen. The problem is this. Look at my hand. The problem is this. Your mom bought the house for 500,000, that's worth 5 million. If your mom or dad gives you the house right now, yes, right now, like what, before February 16th, that's when the new law kicks in, the property tax will not get reassessed. But when you sell it, when you sell that San Marino house for $5 million, for example, when mom died, you're gonna pay capital gain of 4.5 million. How did I get 4.5 million? By subtracting the selling price. When you die, your daughter sells the house for 5 million. You only bought the house for 500,000. That's a profit. That's a capital gain of 4.5 million. So that would be the tax. That would be the capital gain. Okay. So the problem with you giving the house right now to your daughter or son, you would not get the step up basis, and your son or daughter would be stuck with that huge capital gain. So with all appreciated property, you want to set up in such a way where if you give it, where when you die it's worth 5 million and your son or daughter sell it for 5 million, there's zero capital gain. So now I want you to clearly understand, right? These three taxes on the screen are different taxes, right? Taxes are not all the same. Like for example, sales tax, like when you go to lunch, right? When you buy your lunch for 10 bucks, you're going to pay, some sales tax, right? Like, I don't know, 80 cents, whatever the sales tax is, right? So it's actually $11.25 for that $10 lunch, sales tax. Sales tax is different than income tax, right? Sales tax is different than property tax. So what I'm trying to express to you is what you see on the screen are three distinct different types of tax. In order to fully appreciate and understand Prop 19, you have to understand these three taxes that's on the screen, right? So far, I've been teaching you about property tax. What is the law now? And what's the law is going to be February 16 when Prop 19 kicks in, right? And then I said, and then someone said, oh, what if I just give the house away right now to my son, my daughter? Well, you would not, then your son or daughter is going to pay capital gain because there's no step up basis if you gave the house to your children. The estate tax, right now, the estate tax is 11.7 million per person. So if your mom passed away, if she has less than 11.7 million, there is no estate tax. Mom passed away right now, and her estate is worth less than 11.7 million, there's no estate tax. So let's do a simple example where we're gonna walk through all these three taxes. Okay, write down these examples, please, because it will help you. Sticking with this same example, mom bought the house for 500,000. Now it's worth 5 million. She bought it 40 years ago for 500,000. It's worth 5 million. Mom died, right? So mom died. So mom has this $5 million house. And let's say in the bank, she has $200,000 cash in the bank. So it's 5.2 million. 5.2 million is less than 11.7 million. So you can cross out the estate tax, right? Because there is no estate tax, it's less than 11.7 million. So number one is easy. Boom, take it out. Why? Because when mom died, what's in her estate, what she owned is only a $5 million house plus a $200,000 cash. That's it. So 5.2 million, no problem. Okay, so estate tax finish. Mom bought this house for 500,000. When she dies, it was 5 million. Because it's still under mom's name or in mom's trust, you got to step up in basis to 5 million. You sell it for 5 million, zero capital gain, right? Because it's a step up basis. That eliminates number two. That eliminates tax number two. Tax number three, property tax. Now, the property tax. So what we're saying is, right now I'm paying property tax based on 500,000. I am mom, I am dad. When I die, when my daughter gets it, if my daughter chooses to live in this $5 million San Marino house, then she'll pay a higher property tax. So if she lives there, right? If she lives there, her property tax will get reassessed by 3.5 million. How did I get 3.5 million? Remember I taught you, you look at the property tax, the assessed value is 500 grand, for example. You get another million free, so that's 1.5. 1.5, the difference between 1.5 and 5 million is 3.5 million. So the reassessment is on 3.5 million, okay? Only if your daughter lives there, only if your son move into San Marino. But if your son or daughter were to sell that San Marino house, sell it, boom, sell it, well, she won't need to pay property tax either. So go ahead and cross out property tax number 3. That is an analysis where your daughter, your son inherits that San Marino house and it's going to sell it. And if your daughter, son's selling that San Marino house for 500,000, forget about these 3 taxes. You still have your CPA, your lawyer still have to understand it, but that's the analysis I just walked you through. Okay. I mean, that is now, so the question is going to come up again and again and again and again. Why do I give my son, my daughter the house right now? You can do it, but your son or daughter is going to pay the capital gain, because when you put your son or daughters on the grand deed, you destroy tax number 2. They don't get a step up in basis. So to understand Prop 19, how to deal with it, you're gonna have to understand the interplay between these 3 taxes. Okay, all right. So Rick, yeah, I'm just glancing in the chat box. I'm just picking questions. Okay, so someone asked me, Rick Wu asked me, what is the tax rate if it's over 11.7 million? It's about 40%. It's about 40%, Rick. It's about 40%. Okay. Jeff is saying, hey, how long does a son and daughter have to live in the primary residence? Okay. So there's not an exact time limit, Jeff. There are forms. So the county assessor has already now drafted their form. Let me see here. Let me just sort of, let's see here. Let's see if I can show you what the Prop 19 form is going to look like going forward. It's going to look like this. Let me just share it with you. So you know how in the past, how Prop 19 has its own form, okay? So the county assessor now have come up with their own Prop 19 form now. Okay, so for example, let me find a Prop 19 form. Okay, so when mom and dad pass away, and it's after February 16 of 2021, Prop 19, you're gonna have to file this form if you want to claim any, that $1 million exemption. Okay, this is the new form from the county assessor. This is the new form on Prop 19. Okay, so now I gave you an example of a San Marino house. Okay, I gave you an example of San Marino house. Why don't we do a different example? A house in El Monte. Anybody live in El Monte out there? Anybody out in El Monte? No? All of you in San Marino, right? I hate all of you guys. You guys are so rich. Just kidding. All right. So for those of you in El Monte, okay, so let's do an El Monte example, okay, for Paul Horn who lives in El Monte. Just kidding. All right. So let's say mom bought the house in El Monte for 40 years ago. Mom bought the house in El Monte 40 years ago for, I don't know, 150,000. 150,000 40 years ago. And now the house in El Monte is worth $1 million. It's worth, you know what? Let's make it worth 900,000. Okay, let's make the math work. 900,000. So she bought it for 150 in El Monte. 40 years ago now it's worth 900,000. Mom died. Okay, so why don't we walk through this analysis? Why don't we walk through this analysis again? Mom died, right? Mom died. So when mom passed away, you're gonna have to sort of understand the three taxes you see on the screen. Jeff, can you see the three taxes, Jeff? Estate tax.
Yeah.
Okay. So let's do this example for El Monte. Mom bought the house for 150 40 years ago. Now it's worth 900,000. Okay. Let's mom die. So when someone passes away, you're always gonna have to answer these three questions. You always have to look at these three different type of tax. Okay. So tax number one, mom passed away. She has the house that's worth 900 grand. It's worth 900,000. She bought it for 150. So when she dies, it's worth 900,000 and cash in the bank 100 grand. Okay, so her total asset is $1 million. Does she have to pay tax number one? The answer is no, because it's less than $11.7 million. That's the exemption amount. Okay, so scratch number one out. Yay for those living in El Monte. Scratch number one out, right? Number two, let's go to capital gain. Number two, the daughter says, Pauline Lamb, can you please sell this house for me? Sell this house for 900,000. And the daughter says, Pauline Lamb, do I have to pay any taxes on this, Pauline? You say, well, I'm not a CPA, but there's something known as a step-up basis, right? So even though your mom only paid 150, it's in her trust, it's under her name, it's in her trust. When mom died, she gets a step-up basis to 900,000. So when Pauline or when you sell the house for 900 grand, there's zero capital gain. So scratch out number two, right? The house was in mom's trust. When she died, it's worth 900,000. You sell it for 900,000. There's a step-up basis. Scratch out number two. Let's go to tax number three, property tax. All right. So let's do the easy one first. You only pay property tax if you're going to keep it, right? So if that son or daughter sells the property, right? The son or daughter says, I ain't living in El Monte, right? I want to live in Huntington Beach. I want to live in wherever. I ain't living in El Monte. Let's sell mom's house. So if you sell it, there's no property tax implication, right? You sell for 900,000, you're not living there, so you don't pay the property tax. Who cares? So scratch that out. If the son or daughter is selling the house, then Prop 19 means nothing to you, right? Because they're not, only when the son or daughter are keeping the property is there a question of, oh my God, the property tax, my poor son, my poor daughter is going to pay more. Well, they're only going to pay more if they're keeping the property. If they're selling it, no problem, okay? Now, let's say, so in this example, mom bought it for 150. The house was 900,000. It's going to the daughter. The daughter is going to move into El Monte. She's going to move into that house. So now what is her property tax? Is it going to be based on 150 or the 900? Well, Proposition 19 law, Proposition 19, let's go to my chart. Let's go to my chart. Oh, let's go to my chart. Let's see here. Let's look at my chart. Let's see, where am I on my chart? Oh, let's see here. Oh, let me see here. Let's take a look at my chart. Okay, here we go. Let's take a look at my chart. So we're doing an example together. Mom bought the house in El Monte for 900,000. I'm sorry, she bought it for 150. She bought a house in Almonte for 150, 40 years ago. Now it's worth 900,000. She's going to give it to her daughter. Her daughter is going to move into the house. Her daughter's going to move into the Almonte house. Mom was paying property tax based on 150. When mom dies, with 900, the daughter moves in to the 900,000. The daughter moves in. Prop 19 says, you're moving in, okay? You satisfy criteria number 1 because you have to live there. Criteria number 2, we're only going to give you $1 million. We're only going to give you $1 million, okay? So let's say we look at last property tax statement. We look at mom property tax statement. Let's make it simple. Mom last property tax statement shows 150. You take the 150, you add $1 million to it. What's 1 million plus 150, guys? Can someone help me? What's 1 million plus 150? Is 1 million. No, I'm sorry, 900,000, right? The value is 900,000. So remember, you get $1 million increase free. Okay, so the increase to 900,000 and 150 is only 750. That's less than $1 million. So the property tax stays the same because you get $1 million. The increase in value is up to $1 million. You see how the 2 examples that we went through together are San Marino, which is a little bit problematic because it's way over the $1 million, because San Marino house is worth $5 million, for example, versus the Almonte house, where the increase is only 750. Remember, mom bought it for 150. Now it's worth 900. The increase is only 750. 750 is well within a $1 million range. Property tax, there's no property tax reassessment. Okay. So I think if you sort of memorize those 2 examples, it would serve you well in sort of conceptually in your mind, understanding Prop 19. Any question on the 2 examples I just gave you? Okay. Because the 2 examples, if you don't, so I'm guessing that this webinar is going to probably get recorded. Watch it over and revisit these 2 examples that you're seeing. Okay, it will answer a lot of questions for you. In order, so Prop 19 is only going to affect you if your son or daughter is going to keep the property. You know, you might say, well, what are you, nuts, Paul? Of course my son and daughter is going to keep the property. Maybe not, you know, maybe they don't have the same dream as you do being a landlord, right? Maybe they don't like to get a call at 3 a.m. in the morning that the toilet is, clogged up, right? So you might have a lot of rental property and you might say, oh my God, that's such bad news. What am I going to do? Well, okay, it could be bad news, but maybe that your son and daughter don't share the same passion as you, right? If they're not going to keep the rental property, Prop 19 is irrelevant to you because they're just going to sell it. You get a step-up basis, no tax at all at all 3 levels, right? The example that you and I just went through together. Okay. All right. So going forward after February 16th, if you want to avoid property tax reassessment going forward, let me see here. Going forward, if you want to avoid property tax reassessment going forward, here's what you need to do. If you are going to buy more properties, okay, and you want to prevent property tax reassessment when you pass it on to your kid, there is a solution. Okay, there is a solution for new property. Okay, so once again, let's see here. So for all future, can you see what I'm typing, guys? For all future real estate purchases. Now, buy them in an LLC. Put them in an LLC. Buy it in an LLC. Hey guys, don't call me on this. Look at the word all future purchase. All future purchase, meaning that you cannot take your existing property and put into an LLC to avoid reassessment in the future. It doesn't work like that. When you go buy a rental property, you put it directly into the LLC. When you buy a new rental property, you put it directly into LLC. Jeff says, hey man, the lender's not gonna allow it to go directly into the LLC. Paul Horn, don't you know anything? They won't let me go directly into the LLC. They wanted to come to me first, and then can I put it into an LLC? The answer is no. You're gonna have to find a lender that allows you to directly put it into the LLC. Okay? And let me see here. Let me see. Let me just share with you something. Let me see here. Let's see here. What I'm going to show you is a very famous case. It's a very famous case. This is the Michael Dell case. There's a very famous case that says that you can do this. Okay, there's a very famous case. Let me see here. The case is called Ocean LLC. The case is called Ocean LLC, and it's a very controversial case where Michael Dell, who's very, very rich, bought like I think a $280 million hotel in Santa Monica. And he was able to circumvent the property tax reassessment because he bought it directly into an LLC. Okay, that is the landmark case that you have to buy directly into an LLC. That is the loophole going forward. They haven't closed off that loophole yet, but that is the landmark case, Ocean LLC, okay, that will allow you to buy the house directly into the LLC. Now I'm going to type it out for you. When I say directly, I really mean directly. The first grant deed has to be in the LLC, guys. So Carlos, you cannot buy under your name and then transfer LLC. That does not work, Carlos. And Carlos, you're going to say, well, no lender will allow me to do that. Too bad, so sad. If you want to circumvent Prop 19, that's what you have to do. I'm sorry, that's the law. Okay? You have to, on all future real estate purchase, on all new one, you cannot take your existing property and put it in the LLC now. Cannot do it. It has to be a brand new purchase directly into the LLC. You're going to have to find a lender that allows you to do that. Okay? All right. So that is one loophole going forward. And it's a well-established, no question asked Ocean LLC that basically says, yeah, you can do that. Okay. All right. Let's see here. Let's talk a little bit about the good part of Prop 19. So remember how I said the way to think about Prop 19 is the good part and the bad part. Okay, so we have discussed sort of quote unquote the bad part. Let's take a look at the good part. Let me see. Let me pull up my PowerPoint. Okay. So I am going to point you to the good part. So this is a chart. I think that's very good to understand the good part of Prop 19. Now this one you're gonna like, because this one's gonna allow you to make more money. This, now I saw on the chat why the car push for it. This is why they did it. It's supposed to open up more inventory, more houses for you to sell. This is the good part of Prop 19, okay? The concept is, so going back to our example, how the San Marino house where mom bought it for 500,000, I was worth 5 million. This example, mom bought for 500,000, so her taxes on 500,000, but the house worth 5 million. And this lady has an example. This lady has her daughter lives in San Francisco. You know, she would love to buy a home in San Francisco, but San Francisco is so darn expensive. It's like 4 million, you know, 3.5 million, close to 5 million. Wouldn't it be terrific if this lady can move to San Francisco, buy a house in San Francisco, and take her $500,000 property tax with her? That's what the good part of Prop 19 is. Now she can do it 3 times in her life. That San Marino lady who was paying property tax on 500,000, who wants to be closer to her daughter in San Francisco, can move up to San Francisco, buy a $5 million house or even more, and transfer the old property tax base over. That is the essence of why CAR push for this proposition. And you say, hey, but the current law allows me to do that. Paul, you on the chart there is Proposition 60, Proposition 90. That's true. Proposition 60 and 90 allows you to do it right now, but one time only in your life. One time only in your life, and only within 10 counties only. Okay. The current law allows you to do it one time in life, only in 10 counties. Proposition 19 comes in and says, boom, you can do it in all 58 counties, in all counties of California, and you can do it up to 3 times in your lifetime, 3 times. Okay. And so it applies not only to 55 years or older, it applies to those who are severely disabled. You lost your house in a natural disaster. That group can transfer the old property tax basis to someone else. I mean, not to take it with them. They can buy a new home because they lost the house in a disaster, or they want to move closer to the son, their daughter. They can transfer the old property tax basis with them, and they can do it up to 3 times in their life. Okay. All right, Jeff, does anybody wants to sort of unmute them and talk to me about any specific question they have, Jeff?
Yeah, we'll open it up to questions. Please let us know if you have any questions in the chat.
Who wants to speak? Whoever raised their hand, Jeff, click on them. Okay. Oh, Mary Scott. Hi, Mary Scott. Let's see if we can unmute Mary Scott.
Okay.
Hi, Paul.
Hi, Mary.
First, thank you for the excellent presentation. Secondly, I'm pretty sure I know the answer, but Prop 60 and Prop 90 are still laws that apply because of the Prop 19 only being restricted to certain people of certain age. So Prop 60, you can still use it for younger people that do transfers, correct?
No, Prop 60 also has an age limit as well. Okay?
Oh.
Yeah. So the only difference now between 60, so between Prop 60 and Prop 19 is that Prop 60 allows you 1 time only. Prop 19 allows you 3 times.
Okay, so then is Prop 60 gone away? It's
going to go away on April 1st.
Okay.
2021.
Got it. Okay. Thank you.
And Prop 60 used to say you can only buy it for an equal or lesser value. Prop 19 says no, you can buy it for even more.
Okay.
That's why it's so powerful, this Prop 19, in terms of opening up more inventory for you guys.
Great, thanks.
Yeah. Okay. Jeff, who else wants to speak?
Let's see. I see right now Michelle Lee. I'm going to ask to unmute.
Hi, Michelle Lee.
Hi, Paul. Yeah. I have a seller. There's age above 55 years old. So they are principal residents, but the house is in the revocable trust. Can they qualify for the Prop 19?
Yes. Revocable trust, no problem.
Oh,
Revocable
okay.
trust, no problem. Now,
Good.
now, what I want to do, guys, is this. I want to share. Oh, let me see here. Let me just get out of here for 1 second. Let me see. I wanted to do this for you guys. Would it be, oh, let me see. Would it be helpful for you guys to get the PowerPoint and the form that I showed you today? Okay. So what you guys have to do is this. Go to this website that I'm going to share with you. Can you all see that website right there? Click on that website. Just give me your name and email address. And then you can download the PowerPoint that I was showing you, my chart, and the new Prop 19 form. Okay, so those are the two charts that you can sort of, so when you re-watch this webinar, you can follow along. Okay, so just go to the website that you see, that's my website, and your name and email address, and you can download the PowerPoint and the new county assessor form. Okay. Michelle, are you done with your question?
Yes.
Okay, great, Jeff. Who else?
Let's see. I think our next question is from Zhu Chen. Her question is, does Prop 19 exempt from primary home?
Prop 19 only applies to primary resident. So mom have to live there and the daughter or son have to live there in order to get the limited $1 million Prop 19 exemption. So Prop 19 only applies if it's mom primary resident and the son or daughter has to move into that house in order to even sniff at getting the $1 million exclusion. Okay. Yeah. Mm-hmm.
Yeah. I believe that answers the follow-up question if it applies to mom's rental property, which is no, because it's
Rental
not mom's
property,
primary
good
residence.
night, goodbye. Sorry, someone's got to pay for this, right? We live in California. Mm-hmm.
How about if it applies to mom's out-of-state property?
So Prop 19 is purely a California law, right? So this only applies to California real estate only. Okay. Yeah. Yeah. Uh-huh. Yeah.
Okay. I believe that's the last question. Oh, I believe Mary has raised her hand. Mary?
Yeah, just one final thing. Is there a time frame if the child or children decide to move into the house where the mom passed away? Is there a time limit that they have to do it within a year or within a certain amount time period?
You know, that is a good question. I think it's either 6 months or 9 months, I believe. Okay, one of those two. I'm not exactly sure, but the form that you can download will show you that.
Thank you.
You know, Prop 58 did not give you a timeline. Prop 58, you can even wait 3 years, but Prop 19, no. Okay, so really, guys, Prop 19, you really have to understand that for your son or daughter to get the property tax not reassessed, you have to live there. You know, so when the son or daughter have to live there, that eliminate a tremendous amount of pool of the people already, because most likely the son or daughter, they might have a house, in Irvine, they might have a house in Cerritos, they're not going to move into Almonte, they might have a house in Newport Beach, they're not going to move to San Marino. Okay, so first criteria, you got to live there. The son or daughter's got to move in there. Okay, so and that eliminates a lot of people already. Okay, so yeah, so I really see it as very problematic. Property tax, they're going to collect a lot of money from the state of California. Jeff, go ahead, Jeff.
Okay, I believe the next question is from Carlos. Carlos, would you like to speak? I've just asked to unmute you.
Hi, Carlos.
Hi, Paul. Okay, so I can be clear. So Proposition 60 and 90 was for people older than 55. And then they can, if they sold the property, their house for 800,000, they bought their house for 200,000, and they're paying, let's say, 2,000 a year. And then 20 years later, they decide to sell their house to downsize or maybe upsize, whatever. But now the property tax was 2,000 when they bought it, and then 20 years later, the property tax will still be the same as long as they buy under the what they're gonna sell it for. They sold the property for 800,000. They only can, in order to keep the same property tax, they have to buy something below 800,000 because that's what they sold the property for. But now with Property 19, you can go over that price and still pay the same property tax you were paying when you first bought the property. Am I right?
Okay, so Carlos, the house was 800,000 and they buy a $1 million house. So
Okay.
Carlos, the extra between 800,000 and $1 million, though it's going to get reassessed by 200 grand.
Ah,
So you can go above, they'll just tag on that number. Okay,
gotcha.
but it's better than the old law. The old law didn't allow you to do that. The
Yeah,
new law
right.
says, go ahead and do it. You'll just pay the difference.
Yeah,
You
gotcha.
just reassess the difference.
Right, yeah, the property.
Yeah,
Wonderful.
yeah. So Claire Smith asked me, I think I put an important question. Claire Smith says, where did her question go? Is it a wise idea to sell all non-primary property before mom die? What is the best way to leave money to the heirs? So Claire, absolutely not. Don't do it. Don't sell all the properties just to escape property tax. Claire, have you heard the term being penny wise but pound foolish, right? You're trying to save a little bit of money in property tax, but pay huge capital gain tax. Claire, that's not the answer. Don't do it, because Claire, remember I said in order to understand what to do, when you ask this question, Claire, when you always go to this chart, Claire Smith, always go to this chart where I said, hey, for you to sort of understand, where is it? For you to understand, Prop 19, whether to sell it now or transfer it now, you have to understand these three taxes: estate tax, capital gain, property tax. You have to understand the interplay. Claire Smith, if you sell all your rental property right now, there might be huge capital gain involved, right? Huge capital gain, because some of those rental property, you bought it for really, really cheap, really cheap down here, and you're selling up here, you're going to pay huge capital gain. Okay, so don't do it, right? So Claire, the better question is, Claire, does the children want to be landlord? Claire Smith, the children might not share your passion in being a landlord. Your daughter might not have the same passion as you, getting into the toilet to fix the leaking toilet, right? And the moment you die, Claire, they're going to sell this house anyway. Who cares? Prop 19 won't affect them. They'll get the step-up basis, pay zero to the IRS. And because they're selling the house, there's no property tax issue. Okay. All right. So that was Claire Smith's question. So let's see here. Arthur Shu, thank you for your comment about, this is a pretty hard topic to explain. Okay. You really got to understand it. All right. So let's see. Anybody else that wants to say hi to us?
I believe the next one, it actually should be the last question, if that's all right, because it'll be 11:57 right now, and we just want to honor everyone's time. It's from Adam. Adam, I'm going to ask to unmute you.
Hey, Paul, good morning, and echoing what everyone else is saying, thanks. This has been really insightful and informative. I haven't seen or read anything related to commercial property, and I'm assuming because it's silent, it just means commercial property is going to get reassessed.
Yes.
Is that accurate?
Same law.
Yeah, so all commercial property is now going to be subject to that reassessment.
Yes, correct.
Okay.
Yeah. So look, guys, in closing, if you want to go if you wanted to get access to the PowerPoint and to the form, just go to this website. Just click. There was a link that you can click. Are you able to click on that link, guy, that I gave you on the chat box? Able to click it? Yeah. Click on that link in the chat box. It'll take you to that website, and you can download the PowerPoint and the form. And then when your client has a question, maybe you can have them rewatch this webinar. It will really help. Okay. Guys, it's been my honor to spend time with you. Thank you so much for having me. Parlene Lam, Jeff, thank you so much for having me.
Paul, I think Gabriel raised hand. Can we see Gabriel have any question? Maybe it's very important. We want to know. Can we see Gabriel? Gabriel, can you raise your hand again so we can see?
Hi, Gabriel.
Yeah, I have a question. Like, if the parents has a second home and they let their kids to stay there like for free, live there for free, will the second home be charged? Like, will we reassess when they pass away and like pass to the kids?
Yes, that is mom's vacation home. That is mom. So only one house, primary resident, are you gonna get that property tax exclusion? So the answer is yes, Gabriel.
So what should they do right now? Should they like give the house to the son right now?
That is a Claire Smith question, right? All right, you're gonna re-listen to this. You're gonna back this thing up for about 5 minutes and re-listen. And Claire Smith asked me, hey, should I give the house? Should I give this vacation home to the kid right now? So Gabriel, how much did mom buy this house for, this vacation home?
It's like 20 years ago, so really low price.
How much? Put a number on it. 20 grand?
I think it's 200.
200, okay. How much is it worth now?
800.
Okay, so Gabriel, so mom and dad can give it to the kid now. They can give it now, okay? But just keep in mind that one, you got to do it in this week. Okay, that's number one, because that's Prop 58 is this week. Number two, if the children ever sells it for $800,000, Gabriel, they're gonna pay capital gain of 800,000 minus 200 grand, which would be 600,000 on capital gain. So Gabriel, how much do you love this vacation home, right? How much do you love it? If it's just so-so, don't do anything. When mom dies for $2 million, sell it for $2 million, zero capital gain. You take the $2 million and buy a different vacation home, Gabriel.
Got you. Thank you so much.
You are welcome. Here is San Gabriel Social Realtors. Thank you for having me, guys.
Thank you. Thank you. You all agree with me. This is a wonderful and so powerful speech, right? Let's give Paul a big applause. Thank you so much. Paul and Jeff have this great Q&A section. Now we have a better picture on Prop 19, how it affects the property tax. If you do have any question or you need to take some action, please contact Paul's office directly. On behalf of West San Gabriel Valley Realtors, we would like to thank Mr. Paul Horn, probate attorney and CPA, for your valuable and wonderful presentation to us. A quick reminder, for tomorrow, we have a commercials title insurance escrow class start at 12 noon by AnyFan Chicago Title. And Wednesday, don't forget, log in 11 o'clock, February 10th, 2021, Real Estate Outlook by CAR, Deputy Chief Economist, Mr. Oscar Wei will come to talk to us. Please register all the classes at wsgvar.com. Click education schedule, and we hope to see you in every classes and learn together. Thank you, Paul.
One last thing, one
Yes.
last thing, sorry. So,
Yes.
so you know, because this new law takes effect on February 16th, my office, we're not taking any more Proposition 19 cases. You know, there were things that we could have done, but I'm sorry, we just don't have enough time to do it. So if you're thinking about referring your client to me for Prop 19, just be aware that I just cannot take it on because it's just too late to fix it. It's too late. Okay. Yeah.
Yes, I remember today we learned the key point, right? Estate tax, capital gain, and the property tax. Think about those and then review the video and learn together and do the best proposal for yourself and your clients. And thank you again, Paul, Jeff, Fang, and all of you joined today's wonderful class. Stay safe and healthy, and we see you tomorrow at 12 and Wednesday at 11. Thank you so much. Thank you, Paul.
Thanks, guys. Bye-bye.